Hi guys, good afternoon and welcome to CNBC-TV18's Mumbai newsroom. I'm Pavitra Parikh. You guys are tuned into your stocks and we've had a lot of queries coming in which we're going to take up with our guests in just a minute. But first up, a quick look at the markets. We're back in the red. We've seen this flip-flop through the day where we've, seen multiple swings between the gains and losses. And once again, we're trading with around a 20-point cut on the Nifty. The mid-cap index also seeing a cut of around 0.4%. It is the Nifty Bank which is managing to hold on to its gains for now. So we have around 115 points higher on the Nifty Bank. So that has also come off the highs for sure, but that is still managing to trade in the green. I do have to point out that even though we do have a bit of a choppy session and we've seen several dips into the red, the advances are still outpacing the decline. So do keep that in mind. But that's the market action. We'll keep coming back to this. Let me invite our guests on the show in the meantime. We have Parthiv Shah, Director at Tracom Stock Brokers, as well as Rajat Bose joining us to answer all of your stock-related queries. Parthiv, Rajat, thank you both very much for joining us and taking out the time to address all of these queries. There have been many that have come through, so let me get straight to it. Prabhakar writes to us from Hyderabad. He holds 150 shares of ONGC, which he bought at 129 per share. He's a medium-term investor, and he wants to know whether he should hold or whether he should sell the stock. So let me come to you first on this, Parthiv. He's saying that he's a medium-term investor. He bought at 129. It's currently at 147. So he has made some money on it. But, these commodity plays have been quite volatile. What do you think someone should do with a medium-term perspective on a stock like ONGC?
Good afternoon, Pavitra. Pavitra, my sense is it's very difficult to make money in such government-run upstream companies because I think, and especially the investors of having a medium term and in medium term to predict the oil prices probably is next to impossible. Not only that, even at very good oil price levels, the government has a lot of tab on such companies. And if we see the new exploration done by ONGC over the last 5 years, I think not much capex has really gone there, not much new discoveries have come there. And that is the niggling part for the markets for investing in such upstream companies. Set aside the debate about ESG, we are not even considering that at this juncture. And one of the very fine institutional brokerage reports cited ONGC is one of the world's cheapest upstream companies. And again, I think this is a huge attraction for a lot of investors in terms of dividend yield. But I think we are also wary of the fact that, it's very important to see growth in terms of return on equity, which has been languishing for investors of ONGC. So we are skeptical, and I would suggest in avoiding this counter.
All right, avoid this counter. Parthiv, just to expand this question a bit, a lot of these commodity plays sort of move in similar ways, right? Do you think unless someone has a very long-term view, these are all best avoided, or are there still some which you think are safer picks in this pack?
But it's very important to catch the cycles in the commodity play because I think commodity sector as a whole, I think one can really make good money, especially in sectors like say paper, steel, chemicals, because what happens is that if you get the cycle right, you definitely make fantastic returns, but it's not an all-weather sort of investing in the commodity stocks because you have to try and time, you have to understand cycles, a lot goes into it. But yes, I think all said and done, it's a good sector to have some allocation of your portfolio into as long as you can perfectly time it.
All right, as long as you can perfectly time it, but that's much easier said than done, right? And most of us don't really get that too right. But Rajat, coming to you on this specific query, he has investments in ONGC, he has made good money. Do you think that there is some upside left here in the medium term, or is it perhaps better to book profits and get out? Rajat, can you hear me?
See, right since July, around the price of 120, it has bottomed out, and then can you hear me? I can hear you.
Yes, Rajat, please go ahead. We can hear you now.
Hello. It's there. Yeah. I think around the time of say July last year, it bottomed out at 120, and after that it has embarked on an intermediate uptrend. This uptrend is still on, but the gradient is very flat kind of. Now that it has crossed all the moving averages, including the 200 exponential moving average, and sustaining above that, so I would suggest, do not exit immediately. You put a stop loss below 140 on weekly price basis, weekly closing price basis. That is, if it were to close on a Friday or on a Thursday, if that is the end of the week, then only seek an exit. Otherwise, there is a possibility that this might actually move up to something like 160 or 170 range going forward, because although I completely agree with Parthiv, but at this point in time, this is not very expensive, and at the same time, the moving average crossovers are suggesting that there is still some steam left. So one may continue with it, but keep a strict stop loss below 150 on weekly closing price basis.
All right, got it. That is the complete technical as well as fundamental perspective coming in on ONGC. But let's get to our next query now. Sohail Sheikh writes to us from Mumbai. He holds 15 shares of CEAT, which he bought at 1676. He's a medium to long-term investor and wants to know whether he should hold or sell at current levels. Rajat, let me come to you again on CEAT. This stock has actually done quite well, right? In the past 6 months, it's up 40%. Do you think that the up move is likely to continue for a while?
So long as the 200-day exponential moving average and the intermediate support range around 1500 is not broken, I would say one can continue, but this stock might show weakness. So 1450 should be used as a strict stop loss and sell on rallies if it fails to take out 1750. That is the kind of trade that is the kind of approach you can take with CEAT. My suggestion is that booking profits on rallies would be a good idea, and keep your stop loss at 1450. That is the major support area. That's it.
Okay, booking profits on rallies might be a good idea. Parthiv, take us through how you're looking at this fundamentally as well. CEAT very recently announced that they're looking at $2 billion in terms of revenue in the very near term. Rubber prices have cooled off a lot. All of this sort of bodes really well for not just CEAT, but tire makers in general. Do you think this is a good one to keep in your portfolio?
Yes, Pavitra, I do believe so. If not for a very short to medium term, but for a slightly longer term view, you see there are a lot of underutilized capacities in companies like CEAT. And if you look at their past track record, they've increased their gross block. And we knew for the fact that there were challenging years for companies like CEAT, not only in terms of the volume uptake from the OEM and the replacement market, but also in terms of the margins. You know, the margins have gone to low single digits, and understandably so, because when you have lack of volumes, you have operating leverage. And not only that, we realized that the carbon black prices was through the roof. Also, a lot of crude derivative related prices, the rubber prices were high. But after a long time now, what we are witnessing is the cycle is turning around for the good, and these companies will come back to their original margin levels of around 9 to 12%. And if CEAT is able to deliver that at the current run rate of the top line that they're delivering, I think the stock is still cheap. And again, what the management talked about is trying to utilize the capacity. Not much new capacity has come up in this sector. So if at all the demand picks up and the utilization levels go up, I think CEAT should do well over a longer term as compared to what I understand in the short to medium term.
All right, CEAT should do well over the longer term, and our query that's come in is for the medium to long term, so perhaps they should consider both of these perspectives. The next one comes in from Shashikant Kesari. He writes to us from Ludhiana. He holds 100 shares of Ambuja Cements, which he bought at 364. He also has 70 shares of Amara Raja batteries, which he bought at 603, and he wants to know the future prospects of both of these investments. Parthiv, coming to you first on Ambuja Cements, it's not been a good last month, but you know, recently we have been getting these reports that this space could do well because some more price hikes are on the cards. Do you think at least for now you should hold on, and also perhaps ahead of the budget?
I think we are very upbeat overall on the cement sector. Here again, I think the input cost, especially the petcoke and the power and fuel cost, I think they're showing a declining trend. Plus, I think there's reasonable pricing environment for the cement players in the geographies that they operate into. And particularly talking about Ambuja Cements, I think the investors gotten into a good price. The reason why I'm citing that is because the promoters, the new promoters rather, Adani Group, they've cited intention to raise almost 20,000 crore at levels of around 419, 420. And that preferential issuance, I think, will go a long way for them to either expand their capacities organically or inorganically. And again, I think this group has cited the fact that over the next 4 to 5 years, they intend to double the capacity. And Ambuja Cement having very prominent plants, I think definitely should do extremely well. And generally, there's a sense of pre-election years government capex increasing, which into over the longer horizon should bode extremely well for companies like Ambuja Cements.
Okay, got it. So you feel like he should hold on to his investments in Ambuja Cements. Rajat, coming to you on Ambuja Cements, how is this one looking on the charts?
See, regarding Ambuja Cement, I would say it is actually, what I see is that over the medium term, it is showing distribution signs, but still such time it breaks down below, say, 480, I would suggest continue to hold on, especially since the union budget is very close by and there is likely to be spending on infrastructure. So chances are that the 200-day exponential moving average around those levels between 500 and 480, those levels might be tested but not broken, and then there could be some kind of a rally. So Ambuja Cement may continue to be held till such time it breaks down below 480 on closing price basis.
Okay, that is on Ambuja Cements. The next, piece that the same investor had, he said he's bought Amara Raja Battery, 70 shares at 603. What do you think of this one, Rajat? He is losing some money here, but do you think if he holds on for the medium term, he can sort of make that back?
Very unfortunately, the moving averages are suggesting that unless it takes out 600 decisively, which I assign a very low probability, then Amara Raja can actually retest the recent low around 550. So since he is losing only a small amount of money, it would be better to seek an exit from this, because the pattern in the 20-day and 50-day moving average is such that this is kind of a death cross that is happening, and it is better to seek an exit from this counter at the current levels.
Okay, seek an exit from Amara Raja. Parthiv, would you agree with that as well? You think this one is not looking so positive?
I absolutely agree, Pavitra. And rather in this space, we are more upbeat on Exide Industries. Couple of reasons. One is knowing the fact that the lead prices have started coming down. I think that should bode extremely well for them in terms of their margins. Also, knowing the fact that Exide Industries has forayed into the lithium-ion battery manufacturing, and they have huge plans for that. They've had good joint ventures also for the same. So it is as good visibility as to where the capital allocation will go ahead in terms of Exide Industries. Also, we should not forget the fact that thanks to the sale of their Exide Life division, I think their balance sheet is extremely cushioned for any future capex. So it will not come at the cost of huge leverage on the balance sheet. So I think the replacement market cycle should also improve going ahead in the battery space, which should help Exide Industries to roll out better numbers. So I would suggest a switch from Amara Raja batteries to Exide Industries.
Okay, both of our guests agreeing that Amara Raja is perhaps not such a great bet at this point, and Exide could also be a better one. That is the view coming in from Parthiv. But on that note, we have to get into a short break. Parthiv, Rajat, I request you to please stay on, because we'll be back in just 2 minutes and we have lots more stock queries on the other side. Welcome back. You're still tuned into your stocks. We're seeing a little more selling pressure come through in the market. We're currently around 40 points in the red, but the Nifty Bank has actually lost quite a bit. So it was holding up well in the green. Right now, it's just a 0.2% gain that we are seeing on the Nifty Bank. So do keep the market on your radar and the kind of move that we are seeing over there. The declines also now catching up with the advances. But that's what's going on with the markets. We still have Parthiv Shah and Rajat Bose to answer all of your stock-related queries. And the next one comes in from Chandru, who writes to us from Hyderabad. He holds 80 shares of Vedanta at 312. He's a long-term investor and he wants to know what he should do with his investments. Should he hold? Should he sell? So let's answer that question. Parthiv, coming to you, he's willing to hold on for a bit. He's saying he's a long-term investor. And this stock has done well, right? It's up 40% in 6 months. How much more do you think is left over here, especially with the China reopening? We've been talking so much about this metals pack.
See, in case of Vedanta, I think the cycle has held up very well, especially for the metals pack. whether we talk of ferrous or non-ferrous, I think things are looking up. And as you very rightly pointed out, the fears about China not opening up. Now, probably I think they've changed their stance, and that's the reason of late. Also, we have seen some sort of relief rally in the metals pack. And Vedanta, I think we know it's a commodity play, and a lot of its profits are derived based upon the realization that it has. And it has this fantastic key asset of Hindustan Zinc, where it's one of the most profitable commodity for them, and it's one of the lowest cost mine in the world. So that is a big help to Vedanta in terms of its cash flow generation. And the best part, somehow I think difficult to digest, but the promoters have been doling out fantastic dividends to shareholders, and no doubt a huge part of it goes to the parent promoter for their liabilities. But that has definitely helped the shareholders of Vedanta. And going ahead, also we believe that this dividend trend would continue. And again, the company has talked about some capex plans, but definitely we feel that Vedanta is a good stock to hold on to, especially in the current scheme of things, where China's growth will be a lot better than last year, and plus the metals pack is also looking up.
All right, hold on to Vedanta. Rajat, do you agree? Hold on to this one.
Pavitra, I would refrain from commenting on this because if I do, then I would be violating SEBI guidelines.
Okay, fine. We will move on from Vedanta. But that is, the entire metals pack has been in focus, right? Because of this China reopening, and pretty much all of them have been up and about in trade, especially after that news came through. But the next query coming in is from Praveen Gandhi. He's actually on the line with us. He calls us from Bangalore with a query, and he has investments in Sumitomo Chemicals. Mr. Gandhi, good afternoon, and thank you very much for calling us. Please go ahead and take us through your query. Both of our guests are also on the line.
Good afternoon. I have Sumitomo Chemicals, which I bought more than a year ago.
Okay.
Holding it around 496. And a small quantity of 130. Should I continue to hold it, or is it a long-term prospect, or how is it?
Okay. How long are you willing to hold this investment?
A couple of years is okay if there is a reasonably good appreciation.
Okay, couple of years is...
Couple of years, 3-4 years, yeah.
Okay, fine. Let's ask our guests what they think. Parthiv, what do you think about Sumitomo Chemicals? This one, I mean, he is losing a little bit of money on this, but do you think over the next 3-4 years, if he is to hold on, this could be a good money maker?
See, further, I think this company came into existence with the Sumitomo Japanese group buying into stake of Excel Crop Care, and post which I think a very fair thing that they did for all the minority shareholders was to amalgamate all of their privately held companies in the country. And now it's a one single conglomerate, and Sumitomo Group has been very, very upbeat on the Indian agriculture and agrochemical space. And more importantly, I think they are not only talking about serving the Indian markets with launching new molecules every year, which they have done ever since they have done this restructuring, but they are also focusing a lot on the export markets. So I think they are wanting to have India as the hub for long-term contracts and manufacturing, and that is why they have also invested on new capacities. And if you look at the track record, I think that the company has done extremely well, even in some difficult cycles of the agrochemical space. And if you look at the margin profile, they are at one of the best. And again, I think being an innovator, the parent company can always help to launch new molecules, which can cater to better revenue growth and also better margins going ahead. And we do believe the gentleman has a 3 to 4 year horizon. Certainly hold on to this stock.
Okay, certainly hold on to Sumitomo Chemicals with a 3 to 4 year horizon. Let's also ask Rajat. Rajat, this stock has been a little bit range bound, right, over the past 3 years. Do you think that with a medium term perspective, if he's to hold on for 4 years, do you agree that this is a good one?
I would think so, because if you, as I look at it, say on a 5-year chart or on a 1-year chart, that means the daily and the weekly chart on the TradingView platforms, they show that this stock is, although the gradient of the uptrend may not be as great as maybe some defense stocks or something, but still it is actually doing pretty well, and it is maintaining at higher levels, and chances are if the investor is willing to hold for a couple of years or perhaps even more, it is likely to produce good returns for him. And personally, I would say that this is one company that passes my criteria. I follow basic criteria of return on capital employed if it is above 25 on a consistent basis, which it has maintained for the last 5 years, then definitely this company has got some moat to its credit, and that competitive advantage would see the investor making some good money going forward if he continues to hold on to it. Technicals aside, if you want a technical stop, I will give you definitely give one, that is to hold it until it breaks down below 425 on weekly closing price basis. But if I were in his shoes, I would definitely have held on to Sumitomo Chemicals for the long term.
Okay.
That is say 4 to 5 years.
All right, so both of our guests very positive on this stock. Mr. Gandhi, I hope that helps you, considering the fact that you have a 3 to 4 year sort of investment horizon. Both of our guests agree that this is a good stock to have bought and you should perhaps hold on to it. But with that query, we are going to wind down on this edition of Your Stocks. Parthiv, Rajat, thank you very much for taking out the time for our viewers and taking us through all of these queries. Thank you guys for writing in, and remember, you can keep sending us all of your queries and we will address them with our experts. Stay tuned, closing bell comes up for what promises to be a volatile last hour of trade.